It is true that we have seen oil prices come down. As I mentioned, we're below $70 a barrel on WTI, once again, south of $73 on Brent. How quickly, in terms of pace and trajectory, could we see that reaching levels that would bring gasoline down to something like $2.50 a gallon once again? Is there any path to that being realistic?
You know, Kaylee, thanks for having me again. And it's really difficult to get to that price, especially because we need all of the refineries in the Middle East to start exporting gasoline. We drew down a significant amount of gasoline on the water, as well as jet fuel and diesel. And so product prices remain really high. This statistically, the gasoline prices as a percentage of Brent are the highest that we've ever seen them. I think that's true. Maybe around the highs. Certainly gasoline cracks relative to crude are as high as they were in 2022 during the Russia-Ukraine war. And what we really need to see are refining capacity coming back online in the Middle East, exports of products resuming, because it doesn't matter how much crude you have, you need to refine it to make gasoline. And last night's upset of the refinery in Pennsylvania certainly doesn't help the gasoline situation in the Northeast. And so gasoline prices are going to continue to remain high as demand remains high, and production just continues to be lagging the demand response.
So does the president not display knowledge of how this works, knowing that there's gas already in the ground paid for at higher prices, knowing that integrated oil companies don't set the price? He's referring to retailers in this case, must quickly react to this statement and do what they know is right. Are we going to see, maybe he believes pressure is in fact potentially effective here? Could we see retailers and refiners cut some short-term deals here to target $2.50, or is that simply not realistic?
You know, the only thing that would be even remotely possible to get gasoline prices down would be to implement some sort of gasoline export restrictions out of the U.S. I find that unlikely. I think we've talked about it before, and it certainly has been a topic of conversation since the war began, that export controls out of the U.S. are very difficult to implement. It certainly is possible. Constraining gasoline inside of the U.S. will bring down prices maybe in the Midwest and around Texas, but still the Northeast is going to remain relatively high until we can get tankers moving that gasoline to the Northeast. So it is difficult. Obviously, we all know that gasoline prices are not controlled by the majors, but it's controlled by the market, which is the market that we have. Of course, gasoline prices are high. You can have refiners switching from making jet fuel and diesel to gasoline, but then you're going to have even higher jet fuel and diesel prices, which we already have really high prices there. What we really need are the refineries in the Middle East restarting their refineries and being able to export their product out of the Strait of Hormuz.
Well, so let's talk about that export capability for these Middle Eastern countries, Michelle, and whether or not they're going to be able to do so freely without paying tolls to Iran or Oman. Iran consistently suggests that there are going to be fees, or whatever you want to call them, associated with the administration of the Strait of Hormuz. What realistically will that mean for the global energy market if they are able to implement it, knowing that the U.S. says that's a non-starter?
You know, the new fee structure that has been your previous guest said, let the genie out of the bottle. And that is exactly what has happened. And it's very, very hard to put that genie back into the bottle, and not just with Iran and Oman. It's going to raise prices, obviously, to get that out. And obviously the Saudis and the Emiratis have already talked about creating pipelines that are going to move product and crude away from the Strait of Hormuz. So there is going to be some things that are going to logistically change inside of the Gulf. But I think the bigger question is what do tolls mean for other straits, the Strait of Gibraltar, the Strait of Malacca, right? Like once you introduce that you have control over these natural straits and that it can really be a revenue stream, that takes on a whole new meaning for some of these countries, that, like Morocco and Spain, for example. Morocco could receive fees for ships going through the Strait of Gibraltar. That changes what Europe looks like. So I think that it's so much more, the fee structure is so much more than just Iran and Oman. It is applicable to many, many straits in the world that currently you can pass through that are free.
Wow, that's terrifying, the idea of a new global tolling regime. In the meantime, Michelle, we heard that we were on the precipice repeatedly of physical shortages. You mentioned jet fuel, start right there, in Europe, in the UK, in Asia. Was that about to happen, or did we dodge a bullet somehow?
It's such a great question. There, at the very beginning of this war, I created this war endurance model, like how long can the world last? And what I found, of course, which we have found over time, is that some countries just ran out of fuel, right? Like East Africa ran out of fuel. Some of the Asian countries just ran out of fuel, right? And then measures started getting implemented. So you started to look at demand in these three buckets. Bucket number one was just demand response relative to price, which is a normal demand response. The second was a demand response relative to policies. So countries were putting into place these policy measures to curtail demand so that they didn't run out of product, because running out of gasoline or diesel in a country that needs it for emergency uses such as emergency vehicles or hospitals really needed to make sure that they kept their product. And then you had a demand response for just countries that just ran out. And so while the rich countries were able to buy more fuel from the global market, they were able to stay relatively balanced while the poorer countries suffered. And that's really what we saw. So did we run out of fuels? Yes, some countries did. But when you look at the United States and Europe, obviously we had plenty. So were we on the precipice? It's possible. It's just possible that the richer countries would have maintained while we would have continued to see the poorer countries diminish in supply of products.
Michelle, we're almost out of time, but given everything that you have just been describing around what has been the genie that has been out of this bottle, with the fees in the Strait of Hormuz, with the difficulty of getting refining capacity back up and running, what's a realistic price of a gallon of gas by November in your mind?
Because of the Strait of Hormuz, the traffic through the Strait of Hormuz has still been relatively constrained. I think it's still down at least 85% from the peaks that we had prior to the war. You need to get that traffic back up and moving and the refineries back up and running. And I think we all know that there are theoretically some mines in the Strait, so those need to get cleared. So by November, gasoline prices could still be well above $3 a gallon.